Good morning and thank you for joining us on our third Thinking Big webinar. My name's Karen Nelson. I'm the Managing Director of Big Mouth Marketing Events, and those of you who've attended previous Thinking Big webinars would know that I came up with the concept of, of this series, specifically to keep all the amazing people in the Big Mouth community connected, feeling motivated and feeling positive during this enormously challenging time that we're all continuing to navigate at the moment, particularly those of us in Victoria and New South Wales. I'm really lucky, having run Big Mouth for nearly 17 years, that I know some amazingly incredible, knowledgeable and wonderful people who are all really great at what they do, and a lot of them run and drive their own ships and their own businesses like I do. So this webinar series has been designed to enable these people to share their knowledge, their wisdom and their tips and insights, and try and help make a difference to people's lives at the moment. So I'm hoping that these webinars will give people some positivity and, as I say, most importantly, some tips to help them think better, feel better and be better in this challenging time. And with that, I want to tell you a little bit about today's guest presenter, Daniel Koutzamanis. So Daniel's a finance broker and he's got over 6 years experience in broking and banking finance. Over his career, Daniel's worked in a wide range of areas across finance and banking, and he's dealt with funding for an enormous number of different clients across different areas. He loves coaching his clients through the processes of purchasing property, refinancing their debts, and improving their cash flow and funding their investment purchases. When he's not working with numbers, Daniel loves to get outdoors, particularly down to the beach. He's also a massive foodie and he loves exploring the different bars and restaurants around Melbourne, which he's very keen to get back into once we've come out the other side of this COVID cloud. Welcome, Daniel. It's fantastic to have you with us today.
Thanks, Karen, and thank you all for joining me.
So today, Daniel is going to give us some insight into the numerous things that we can all do to ensure that we make the most of our finances and keep financially fit at this challenging time. Daniel's presentation, following Daniel's presentation, we'll have time for some chat and some questions. So if you'd like to put any questions to Daniel, please pop them in the chat feature and I'll put them to him at the end of the presentation. When we do finish, if there's not time for all the questions, Daniel's happy to take them offline later on and he'll get back to you personally to give you his expertise and his advice. And having worked with Daniel over the years, I can tell you his advice is always spot on. So with that, it's time for me to hand over to you, Daniel. You can take the screen.
Fantastic. All right. Thanks, guys. Just before we get started, I just want to first of all thank Karen, Harlan and the team at Big Mouth Marketing for obviously having me as part of their Thinking Big webinar series. Obviously challenging time at the moment, but yeah, just obviously quite excited to go through the content today and obviously, yeah, make a difference in some way to everyone out there. So I'll just share my screen, just bear with me. All right. Fantastic. Okay, so the topic of my presentation today is keeping financially fit. Obviously, it's quite a big topic at the moment. Obviously, you know, obviously what's going on with COVID at the moment, finances are talked quite a lot. Obviously, with the shutdown, especially in Victoria, and obviously reduced capacity around the remaining states. So what I'm going to be doing with my presentation today is just talking around the things that you can do on a day-to-day basis that can obviously help, help obviously keeping financially fit, as well as looking or putting you in the best position possible to maximize your financial opportunity during and obviously post-COVID as well. Okay, so yeah, just a little bit about myself. Obviously, Karen's just touched on that before. So look, I've obviously got over 7 years finance experience. I've worked in a wide range of areas within banking. Also got extensive experience within residential, personal, investment and commercial lending. Currently, I work as my own franchisee within LoanMarket, within finance and mortgage broking. A bit about LoanMarket. So we're one of the biggest mortgage or finance broking firms in the country, and we are one of the only family-owned firms as well. So I'll just move on to the next slide. So let's start with keeping financially fit. So look, obviously that's quite a big thing at the moment. You know, cash flow is ultimately the key. what I'm advising my clients to do, and what is certainly a good idea at the moment, is really taking the opportunity to maximize and review your monthly expenditure. Taking the opportunity just to really review and separate your expenditure into what's basic and what's discretionary. So where you're going to get a lot of wins out of is certainly within the discretionary basket. Obviously, you know, as you're going through life, there's certainly expenses that are obviously coming up that, you know, it may not be such a bad idea to reevaluate and just see whether or not they're absolutely, you know, crucial to your lifestyle, and whether you can live without them, or if there's another way that you could, you know, obviously substitute that cost for another cost that is slightly lower. The other thing that I recommend clients do is obviously considering debt consolidation where possible. What a lot of clients don't realize is that, you know, obviously what they're paying on credit card facilities, other personal loan facilities, business facilities, and there's certainly an opportunity there to consolidate those into a more streamlined and cheaper finance option if you're speaking with the right person. Other things you can certainly look at as well is considering additional borrowings. What a lot of my clients are obviously having some wins with effectively is obviously with the reduced cash flow during this COVID time, I guess you could say. They are obviously considering additional borrowing against, you know, their current mortgage, investment properties and businesses as well, which is obviously just helping them keep on top of their expenses during COVID. The other thing as well that I'm advising a lot of my clients to do is obviously lever the government assistance where possible. Obviously for business owners, I'm sure they're already aware of JobKeeper. So obviously if you're needing some guidance on that, certainly get in touch with your accountant or your finance or whoever's handling your bookwork. They'll certainly be across the government schemes that are available at the moment for business owners. In addition to, if you are an employee, you can obviously there are some certain government assistances that you can take advantage of as well. All right, so how can I get financially fit? So this is the question that I get not only from people, or obviously during COVID, but obviously outside of COVID, who are looking to obviously maximize their, you know, ability to or help achieve their goals, I guess you could say, with either buying property, investing, or even building a business. Look, it sounds really basic, but at the end of the day, it's not so much about what you're earning, it's how you use your money and what you're preventing from being spent. So it sounds very basic, but obviously being very disciplined and doing a budget, especially a budget within your pay cycle, is absolutely crucial. I think the people that are those who are keeping, you know, spreadsheets or even levering, there's numerous apps out there you can download on your phone that can keep track of your spend and you know, making sure that it is within your budget. So absolutely look at doing that. It's definitely a must-have, irrespective of where you are in your, you know, your life stage and what your goals are. It is absolutely a must to keep a budget and also sticking to it. I think that's quite difficult to do, but you know, I've certainly found over the years the ones that have stuck to their budget and been really really granular with their costings on a monthly or weekly basis have certainly reaped the rewards with achieving their financial goals, whether it be in property or business or in other investments. Probably a really good option to look at is obviously utilize comparison services, especially this would be more within those basic expenses. So really looking into your utilities, insurances, you know, really getting granular with that. Look, what people really really don't take as much notice, and probably what they should is obviously their costings there. You know, utilize the comparison websites. You know, always do a review every 12 months. That's what I reckon with my clients. Using Cashmore, that's another one. Look, in the day of PayWave and Apple Pay and Tap and Go, it's definitely easy to lose track of what you're spending. I know I'm personally guilty of that. I think what I've found with a lot of clients who are going back to cash, they are finding it easier to manage their money. I think because it is, you're bringing the physical value back to cash. And that's certainly helping a lot of people, a lot of clients of mine. I know it sounds a little bit old fashioned, but it's certainly helping a lot of clients of mine with managing their budget a bit more easily. Setting a savings goal, or it could be a debt reduction goal, just depending on what your goals are. Set a challenge to yourself. How much can I put away every pay cycle? Or even automate this if you can. Put away, or even get your employer or your accountant to put away some money for you, depending on if you're a business owner. Putting money aside, and I think that's really the key here, is just see what you can achieve. I think because at the end of the day, the more money you can put aside, the quicker you're going to reach your goals, whatever they may be. Now, the final thing that with getting financially fit, the other key win that a lot of clients of mine have is with setting up sub savings accounts. Especially if they're offset against your home loan, you can get a double win there. Creating subset accounts and obviously naming them your goal, that's definitely something that has had some success as well with clients of mine. All right, now I just want to move on to the biggest expense of all within a household. Obviously Australians, this is effectively their biggest expense. And a lot of people probably don't realize that it is effectively an expense, because at the end of the day, we are paying interest on that. And it is taking out majority of or in most clients' cases, majority of their income on a monthly basis. So that expense is their home loan. I'm going to add investment loan on top of that as well, but majority of the time, the biggest share of one's, biggest share of the expense is effectively going towards their home loan, I should say. So, which makes it even more important in these times. So obviously review that, and obviously review your debt position at the moment. For those that obviously have multiple properties or multiple loans, this can be attributed to that as well with getting that review. So what I recommend everyone to do now, whether it's through a broker, whether it's through a bank, absolutely you need to be doing a review on your mortgage. Because what a lot of people don't realize is that you can in fact refinance. A lot of people think that you have your mortgage for the rest of your years on this earth. That is not the case. You can refinance. You can get a better deal. You can obviously look to change products as well, because the loan that you're generally set up with is based on your circumstances when you have purchased the property. Okay, so banks change their policy based on a variety of different factors. So if your life stage changes for whatever reason, if you've paid more off your loan, or your house has gone up in value, or you've had an increase in income, chances are you're probably going to be able to get a better deal. So what banks do is that they really, if ever, they don't tell clients this. They never advise their clients of getting a better outcome with them. So that's why I recommend you absolutely need to have a broker within your corner to at least I recommend doing a review every 2 years. I've had clients who have saved, many thousands of dollars just by doing a simple review. Making sure that your finance broker is in your corner, not just with your personal goals, but also with your business goals, because a broker can generally also help with, like I said earlier, consolidating, also, freeing up some equity, and obviously assisting with getting you in the right channels to obviously lever investment lending as well. So the broker really is to be your long-term finance partner through your journey. Look, just to give you some idea, look, rates on offer as low as 2.19 at the moment for certain clients. And banks at the moment during COVID are very hungry for business. So a lot of banks are offering rebates at the moment to get your business. So certainly lever these avenues. And yeah, like I said, obviously these rebates will be in cash. So that's obviously a nice little stimulus during COVID as well. All right, the next part I just want to talk about is debt consolidation. So yeah, look, obviously this is probably a big thing at the moment with COVID. A lot of people are utilizing credit cards personal loans, short-term debt facilities, Afterpay, ZipPay, etc. You do have options. So there are options. If you are a homeowner, if you have got property, there are options to look at consolidating these debts onto home loan interest rates. So just to give you a bit of an example, credit card rates are sitting at sometimes 20% and upwards, whilst your traditional home loan rate at the moment, like I explained on the slide before, you're sitting at around that 2.19. So it is a big difference. Look, these things certainly add up. What I recommend clients do is, if you are looking to consolidate, you would simply maintain your normal payments on your credit card, but putting it onto the home loan. And we will be putting that as a separate split as well, so you can keep track of that for your budgeting purposes. So that is certainly one way of obviously improving your cash flow. There are some lenders that will also consolidate business debt as well. Similar sort of situation where we're obviously consolidating debt that's at quite a higher rate onto a home loan rate, still with a separate loan account. There are options if there are issues with credit impairment. There are some lenders who can obviously consolidate that debt as well, even if the debt has gone to to debt collectors. So if you are in that position, we absolutely have options for you. Obviously, it is very case by case, but certainly that is available to clients. So the whole idea with debt consolidation is really to streamline and improve your cash flow, freeing up cash to do other things, whether it be putting that cash towards achieving your other personal goals, or even your other business goals as well, or improving, freeing up capital to then utilize and put back into your business to allow you to invest further and grow your business. What people don't also realize is that obviously eliminating credit cards, even if you are consolidating these short, credit cards and other short-term facilities, that is improving your borrowing capacity as well a lot of the time. So this does help you with borrowing for your business, for your personal or property goals, whatever they may be. So it's quite important to make sure that obviously we are putting you in the, as better of a position as possible in terms of your cash flow with getting rid of these short-term facilities. Okay. Now, the next slide I'm going to be talking about is more relating to, it's probably more of a proactive, I guess you could say, I guess that would be your next step during COVID. So it's probably not so much looking within, it's more looking without, and achieving your next goal. And that's around investment lending. So what people are obviously looking at the moment, at the moment, property is tapering off a little bit, or it's starting to at least. So the benefit is of consolidation. That's going to allow you to, if you are looking to actively invest in property or other means or avenues, obviously doing the review now and consolidating the loans and improving your cash flow is going to put you in the box seat to be able to take advantage of investment opportunity over the coming months, if that is what your goal is, during COVID or even post-COVID as we come out of it. So as I said before, these are the two things that are really going to improve or help you achieve those goals. Obviously, reviewing your existing debt through consolidation and even refinancing, as well as reviewing and reducing your expenditure, which will both help your borrowing capacity and cash flow as well. All right, so look, I've kept it, that's pretty much it in terms of what I'd like to cover today. It's just pretty simple. I think it's really, as I explained, it's just really just streamlining your expenditure, putting those into a basic and discretionary category, utilizing your budgeting tools, also your, the comparison websites you have available. And in terms of the debt side of things, obviously making sure that you have got someone in your corner with, who can obviously open you up to those opportunities to, improving your loan your loan rates, and also looking at the consolidation options as well to help improve your cash flow. So you can take advantage of those opportunities during COVID and also post-COVID. Okay. So yeah, any questions at all? I might hand it back over to Karen.
Thanks so much, Daniel. Yeah, look, I've got a couple, if I can just pose one straight off the bat. And I've been writing some notes while I was listening to you, and thank you. I learnt some more from you today. You talked about budget apps, and I'm guilty of kind of, not always budgeting or generally forgetting to budget.
Yep.
But having an app, I didn't even realize he had things like that. Are there any apps that you recommend that someone who doesn't do that but really should can look at?
Yeah, absolutely. So look, I'm a little bit old fashioned. Look, I like to use my spread still, but having said that though, I've had some wins with, there is, I believe it's called Up, or Up Banking. So have a look into that.
Okay.
That's a really good one. There are a couple of ones, there are a couple of others on the App Store as well.
Okay.
Generally, Up is the one that's really, really, really good.
Okay.
But that's more of a banking. So with the budgeting, you've really got to, because it's so tied in with your banking, the Up app, it does need a link in with your banking. So just keep that in mind.
Is it fairly easy to do that? What about if you've got stuff across a couple of different bank accounts? Can you link those to the app?
Yeah, there's a couple. Yeah, so with Up, you would need to, obviously, I believe you do need to set up an account with them.
Yep.
But having said that, though, there are multiple other ones that I can get back to you on that are offering those features and facilities.
Fantastic. That'd be awesome. Another question that I've had put to us is, is there anything that you can do to actually streamline, maybe the app is it, streamline your personal cash flow at the moment? So do you have a tip, your top tip for what I should, and anyone should concentrate on streamlining their personal cash flow? Yeah,
so look, there's a variety of different ways. Look, probably the biggest streamlining cash flow currently. So I assume you're looking more at your expenditure. Is that what we're?
Yeah.
So just really looking at, like I said, I on a personal basis, just really looking at your basic expenditure. So really looking at your utilities, making sure that you are getting the best deal on those. Because like I said, a lot of these utility providers, they only offer discounts within the first 2 years of you being with them. So a lot of people don't realize that. So I've actually got a background of working at iSelect, which is obviously one of the biggest comparisons websites in the country. So really getting onto that, really making sure you're reviewing that. Same with your health insurance. I believe the government's, passed a law that, you're not allowed, or you can't go down, or you can't be disadvantaged on your level of cover. So looking at that, making sure that you're obviously, reducing that where possible, because that then becomes uncompetitive. Improving cash flow. Look, it sounds very basic, but using cash where you can. I think the banks have really got everyone in the habit of getting into that habit of tapping and pay. So that's really disconnecting that, I guess that, the notion of paying for something and obviously, you earning cash to then use to spend elsewhere. And so I think using cash where possible and setting yourself with a budget every week on, okay, cool, this is what I'm going to be spending for my weekly shop or whatever my other expenses are, and using cash where possible. That would be my other big tip.
Okay, fantastic. Got another question for you. So what's the best way to get a good credit history so that when you get ready for big purchases, you're going to be approved for lending? So do you have any tips on how you can really, get a good credit history?
Yeah, absolutely. So with my job's all about reviewing customers' credit files as well. Obviously the banks, that's one thing they absolutely look at, especially with what's happening at the moment. It's called comprehensive credit reporting. So what the banks are doing is that they are reporting to each other what your payment history is like. Okay. So previously it used to just be about, okay, if you've defaulted, then it hits your credit file. So at the moment, what's happening, if you miss payments, that's hitting your credit file and impacting your credit file. So what I recommend you do is obviously making sure that you are, meeting your repayments. That's quite important. But as I said before, making sure that you're reducing as much debt as possible. So if you've got $30,000 worth of credit card debt, that's obviously that's not going to be good for your credit file. Okay. If you were to consolidate that into your home loan, or any other loan that you have, reducing that in some way, the less facilities, the better. That's the key with your credit file.
Okay. Cool. Another question, Daniel. So you would have the financial means at the moment. Is now a good time to actually look at getting into property to invest?
Yeah, for sure. I'm always a supporter of property. I think with COVID, I definitely feel as if, there's definitely not as many buyers out there. So you could certainly be looking to take advantage of the market at the moment. I think, the next 6 months, I reckon, it's all going to come down to when we get a cure. I think as soon as we hear that we've got a cure, I feel like everything's just going to bounce back. It may not be straight away, but I feel like, it's certainly going to, I don't think it's going to drop as sharply if there is light at the end of the tunnel around us, coming out of this crisis. So, if it were me, if I'm looking to invest or get into the market, I think the next 6 months would absolutely be a good time.
Right. Okay. And from your experience in terms of markets, are you seeing any areas around the country that are better to get into? So, just because you're in Victoria doesn't mean you have to invest in property in Victoria, right? You could invest.
Oh, absolutely not.
So are there any markets that you see as a finance and mortgage broker are good markets to look at?
Yeah, absolutely. So I think, you got to look at, it's funny, I've got a property, or property coach I do some work with, and he always talks about the property clock, I guess you could say.
Yeah.
The clock being, you get to 12 o'clock and, obviously as soon as you go past 12, that really signifies the market, obviously, tapering off or cooling a bit. So the markets that are quite strong at the moment, certainly regional areas, Geelong down in Victoria, that's obviously quite a good market. Generally where there's a lot of construction, because of the government assistance, a lot of people are needing that assistance to in fact get in the market. Because they're generally in the position where they can only really buy a property that is brand new, because they're needing that assistance, because a lot of that assistance is only geared towards people that are building. So the regional areas where there's a lot of construction, there's been quite good price growth, especially southeastern suburbs of Melbourne. Obviously Brisbane's a really good area as well. I've had a lot of clients with really good growth around, not just the CBD or the outer suburbs of Brisbane, but even just outside of Brisbane as well. Okay. So wherever there's a lot of growth or where there's going to be a lot of population growth, that's generally, where I've seen a lot of my clients having wins, coupled with areas where there's a lot of new construction on the back of first home buyers, on the back of investors, obviously taking advantage of the government assistance to get them into property, which they would not generally get buying an existing, but they wouldn't get as much of it if they were buying an existing.
What about investment in rural? Are you seeing people going, oh, I've got to get out of the city, it's too claustrophobic, I want to move, take a tree change? Are you seeing any of that?
Absolutely. Absolutely. So there's a lot of government assistance. I know in Victoria there's a lot of government support with doing that, the tree change. So yeah, absolutely. Look, if you are a first home buyer, your first home buyer benefits double. Your first home buyer grant effectively doubles up to $20,000 if you want to obviously build a property in rural Victoria. So I know there's a lot of other states that have some similar schemes as well. So yeah, look, obviously in terms of lifestyle, for sure, there's a lot of people who are looking to do that. The other benefit of rural is that you generally will be getting, generally your yields are pretty good. If it is for an investment property, the yield return is generally a lot higher against, your percentage return against the value of your property is generally a lot higher than what you would receive within cities.
Okay.
or major centres.
Good to know. Well, probably should wrap it up now, mindful of time. Thank you so much, Daniel, for your knowledge and your insights. Everyone, if you want to find more about what Daniel can do to help you make the most of your finances and keep financially fit, you can see his email there on the screen and his mobile number, and I'm happy to share those with anybody who'd like them offline as well. Having, as I said earlier, worked with Danny myself, I know firsthand that he takes the time to understand your unique financial needs and circumstances, and then he works with you to make sure you get the absolute best out of your finances. So I would highly recommend, if you want some advice, Daniel is the guy to go to. Now, our next Thinking Big webinar is called The Nature of HR and the New Norm. Deb Papard of HR Staff and Stuff will be providing a range of tips and tricks of how you can help work with your team and people management, sort of keeping everybody connected. And I think that's the most important thing at the moment, is keeping connected and keeping people up and positive. So Deb's got some incredible experience, and she's got some great ways that you can personally keep yourself up, but also ways that you can work with your team and also reach out to family and friends. So she's got a lot of wisdom, and promise that you will get a lot out of her webinar. If you want to find out more about our other webinars in this series, you can see the link there on the screen, so you can have a look at that and register for future. And we're working on others ongoing, so keep track, keep a lookout, and we'll have more coming out across our social media as well. Now, your feedback is really valuable to us, so we're going to be sending out a post-event survey this afternoon after today's session. It only take you 2 minutes at the absolute most, but I'd really appreciate it if you can take that time to give us your thoughts on what you thought about today's session. If you've got any ideas and things that you'd like to learn more about in future sessions, that'll help us sort of plot the way as we navigate the rest of our Thinking Big series. If you've got any questions that you'd like to put to me personally, please reach out to me on email. So it's Karen, KERRYN.Nelson, NELSON, @bigmouth.net.au. Or if you've got someone that you think would be a great presenter on a topic, or if you yourself would like to be part of our series, please reach out. You can also become an honorary Big Mouth by sharing the word about our series across our social media, and you can find the links to all of those on our Big Mouth website. Thank you so much for being part of the Big Mouth community. Thank you for taking the time to be with us today. And until next time, please stay well, stay safe, and most importantly, stay up. Take care, and we'll see you again soon. Bye.